Good evening, viewers. Today we are looking at the computations of process account, where we have process losses, process gains, and abnormal losses within one question. And we are going to look at how we can handle this so we can kick off without wasting time. We are using question. It says Tororo Factory Limited produces product B, which passes through 3 processes, 1, 2, and 3. The data below relates to the month of May 2022. We have the items, we have the processes. These are the processes. Can try to merge these ones. Yeah, these are processes. These are the processes. We have process 1, process 2, and process 3. We have the items. We have direct material. It is taking this amount. For process 1, it is 40 million. Process 2, it is 20 million. Process 3 is 24 million. We have direct labor is taking 30 million in process 1, 15 million in process 2, 20 million and 80,000 in process 3. We have direct expense is taking 12 million in process 1. This one is taking 2,250,000. That is in process 2. This one is taking 10,768,000 in process 3. Then we have the production overheads. The production overheads, they are 10 million each of the 3. They are 10 million each of the 3 processes. So they are saying that 20,000 units were introduced at the beginning of the process. That is process 1. They introduced 20,000 units. We have the additional information, and the additional information has items. We have the normal losses in percentages. We have actual production. These are in units. Then we have the scrap sales, and these are also in units. So we can try to get those ones, and we try to see how we can be able to reach to where we are heading. So we are seeing that process 1, we have 10% as the normal loss. Actual production is 17,500. Then the sales, these are in shillings. When you try to view here, it is in shillings. I can maybe try to enlarge this one so that you can be able to view everything. Then this one. Yeah, hope there you can be able to see everything. These are in units. These are in shillings, meaning the whole of the losses we had, they were scrapped. We had no wastages. So hope you can get now to know the differences. We said that if you have the wastages, if you have the scrap values, we have the scrap values, we expect that we can realize them, or we can get something from out of them. And here we are seeing that it is 10,000 in process 1. That's what they are paying. It is 1,000, sorry. It is 1,000. Then process 2, we have 5% normal loss. We have the actual production, which is 16,800, and the scrap units, they are bought at 2,000 each. And we are seeing we are seeing this one is saying process 3 has a normal loss of 2%. Then we have actual production of 16,400 and the scrap units are sold at 5,000 each. Then you have the required is saying prepare process accounts. When they say process account, it means they want many accounts as from 1 up to the last one. We have the abnormal loss or gain account, and finally the finished goods that is stock. Can call this one stock account. So we can go ahead and use this information and we get to know how we can be able to apply it and we get what we want. Can put in a separator so that we'll be able to see the figures. Let me also put a separator here. Okay, hope that one is a bit clear for you guys. Okay, I copied the other information as it is reflected there. We are seeing that what we have here is the information we've got from there. When you see there the exact figures we have, process 1, process 2, process 3, these are the ones we are going to be using, plus the other table for this table. We can also copy it from here and we paste it the other side so that we'll be able to see it very well. Can just copy it and we paste it here. Just make it be next to this. Yeah, I hope here you can be able to see everything and you can be able to identify whatever information that we have given without changing on the other side and coming back. So hope it's now okay with everyone. Then we can start off. Okay, can save. So there are some things which I want you guys to look at if you are getting it. If you're doing any number on process account, what are the things we first analyze before we start doing the number? We can put here this is our solution. Now we go to our workings. In our working number 1, we have to first analyze each process by process, and we see the cost we've incurred, the normal losses, have the good units to know whether we have abnormal loss or abnormal gain within that process. So the first thing we start with, we first identify let me just use the words. I say step 1, we identify the inputs, what we've put in the system. And we've seen that the input in this system, they told us it was this figure, it was 20,000 units. So we are going to put our units there, 20,000. There are 20,000 units. Remember, these are in units. Identify the units. Then step number 2. Step 2, we have to get our normal loss. normal loss. This time we are getting it in units. We get our normal loss in units. So when we get our normal loss in units, then the next step will be step 3 will be getting the scrap value for those normal loss. Scrap value computation. Computations, we can put S. Then our step 4, we get the good units expected. Good units expected. When you get the good units expected, then the last one will be step number 5. Step number 5 is to get both the actual production. Permit me to use PDN for production, and the abnormal losses or gains. You can say and the abnormalities. We can get the abnormalities. How do we get these ones? We deduct what we were expected to produce from. Can move this one here and we try to put it somewhere here. Let me adjust this one a bit. Yeah, we put everything here. And try to make these ones big broad. Those are the steps we follow. If you want not to confuse yourself, you must start with those ones whenever we are computing any number on. Or let me just push this one so that this one is remaining the other side alone. Whenever we are handling any number, we start with these steps. Make sure you follow these steps so that you don't get confused. When you follow these steps, I'm telling you, you'll pass this number and you'll not have any challenge. We said the units we had, they were 20,000 units. But remember what was our normal loss. They said in process 1, we are expecting a 10%. A normal loss is always on the input. You cannot compute a normal loss on the output because these normal losses are detected before even the production starts to take place. So we get our equal sign. We say they told us it is 10%. So it is going to be 10%. It is 10% of the input. And we get that. There are 2,000 units. So if you want to get our scrap value, the scrap value, these are the normal losses. We multiply by the unit cost. They told us they are going to be selling them at 1,000. So when we multiply, we shall be getting 2 million. And in that 2 million is going to be giving us the scrap value or the scrap sales value. And that's 2 million we've got. And we said we want to get the good units expected. To get the good units expected, we get the input, what we put in, we deduct the normal loss we are expecting to incur, then we'll be remaining with the 18,000. Hope you've got that. Then we get either the abnormal. Now when we get these, we can try to change this one. We make sure we separate them because we shall be needing them. Can remove this one here. We'll make another step here that is going to be handling this. We can put step 6, the abnormalities. Then here we are saying we identify, because this one is always given in the question. So we identify the actual production. What if they don't give you this actual production? It means they must have given you these abnormalities. When they give you these abnormalities, they are the ones we are going to be using to determine the actual production. Because if you have got this, if let's say it is, you have got this, but you don't have this, but they have given you this one. They have given you that they made an abnormal loss or an abnormal gain. You either add it back on this one or you subtract it to get this one. Hope you can just know it's just a matter of changing the subject of the formula so that you can be able to get that. We are saying the units, they told us that the actual production is going to be 17,500. That's the production in process 1. So you can now here deduct the good units expected. We expected to get 18,000, but the actual production, we got only 17,500. It means that difference is going to be, we are seeing now we expected to produce more, but we received less. It means that one is going to be an abnormal loss. It will be this minus this, which will give us 500. And these 500, they are in units. Whatever we've been computing except this was in units. These units, we can also say we want to get the scrap sales, because they told us everything was a scrap, not waste. Scrap sales for that abnormal sales from abnormal loss. We say this is a loss of 500 units because we produced less than what we expected, and we are selling these ones at the same 1,000 that was given to us. It will be giving us 500. That's how we compute that. And when we are done, because there we are done, the only thing we want is one to get for us the total cost so that we can just fill everything in our figures. We can insert here. Let's insert and we get the totals. Yeah, we get the totals here because there is nothing we are going to be adding on. Everything is included there. You can get the totals. We say it is equal sign sum. But most of the question you may find that you have to reorganize all of this. But if it is organized like the way you are seeing, you just get the totals. Now we are seeing it is giving us that can get up to here. So you've seen that this actually is giving us the total cost they spent in the production. They incurred the whole of this in all the processes. So what we want, the only thing that is remaining is to get the unity cost. Why are we getting the unity cost? Because we want to determine the cost that we are going to be using for the final output. And we said to get a unity cost, it is equaling to the total process costs, total process costs we less the scrap, but here we are removing the normal scrap sales because we said the abnormal ones, they are not part of the production cost. Let me use normal scrap sales so that you can be able to identify this. And you say, because I don't want it to mix in the other abnormal one. We said those ones, they are not part of our computations. So here we are saying we are dividing over the good units expected or expected output. Expected output, whether it is high or it is low compared to the production, it's what we take. We said, how do we get it? It is the input minus the normal loss units. That's how we get that. And try to push it this side so that you get, hope you can be able to see this. Let me try to enlarge this. Okay. There we are done now. Can put in here so that I separate this. Hope you can be able to see that different from. Okay, now we start our accounts. We determine that let's first get the unity cost. The unity cost for process one. For process one, it will be equaling, we can put it here. We said it is going to be equaling to the normal, the total process cost, which is this, minus we said it is minus the scrap value, which is this. The answer we get, we can say divide. Let's put this in brackets so that we'll be able to divide. Then divide by the expected units, and the good units expected, they are 18,000. We press enter. So it is 5,000. For process one, the unity cost is 5,000. So we can now draw our accounts. These are now going to be our process one account. And we said we have a column for particulars. You can put it here. Particulars, we have the unity cost, We have the units. We have the unit cost. Sorry. We have the units. We have the unit cost or cost per unit. Then we have the amount, it is a T account. Then we have particulars again. Have the particulars, we have the units, we have the unit cost, we have the amount. So we've got that. And now what we want is so we can try to enlarge this one. Okay. Okay. We start our particulars. We are putting in these figures. We can just drag this, the whole of these ones, we just post them there. Sorry, we are taking on this. Sorry. Yeah, we are pasting this one here. Cut those ones from there, we'll put them here. Okay, we've seen how to do that. You can now enlarge this a bit. Yeah, it has not gone far. Can try to get that closer. Okay. We put in our units. The units were 20,000. Since we did not introduce in any units, they are going to remain 20,000 for that. If we had the abnormal gain, they would have gone here. But since we don't have any, this one we can get how much was it? It is this divided by this. They were at 2,000. So we get our, now we are transferring the, we have to first write the normal loss. But the normal loss we are taking it in units and in terms of the cost. The cost was 2 million. 1, 2, 3. Yeah, it's 2 million. You can also, if you want, you can also put the price, but we have already multiplied it, even if you don't put that. And here we have to put our abnormal losses. And we are saying these abnormal losses, the value for these abnormal losses is the units were 500. But remember, this abnormal loss, we are valuing this abnormal loss at the price of the finished or the good units. And we are valuing them at 5,000 as the same way we are valuing the good units. That is 5,000. So don't get confused with this value here. Then we get also our final, our outcome, the outcome of the output of process one. But we said this one, it's not going to be the output, but it's going to be, instead of saying output, we are just going to be saying it is process two, because the input of the output of process one becomes the input of process two. When you put here process two, it will be leading us to put that same figure into the other process to account, that is, and we have the actual production, which was 17,500. We are valuing it at 5,000. The reason why we are valuing these abnormal losses on the same cost is because this one, we did not account for them. They just happened, but we did not expect them to happen. We expect that they are supposed to go through the whole of the 18,000. So we value it at the good units cost. So it will be equal sign this. We multiply by this. It will be giving us that. Then it will be this equal sign, cosine this. We multiply it by this. Then we'll be getting that. When you add up these units, we said these units, they must be equating to these ones. If they are not equating, then just know you've made a mistake. We say sum they are becoming our 20,000 units, but this one we don't. We just leave it empty. We just sum this side. Even this side, they must be equating. The only way they can be not equating is when you've made off, when you've, let's say, rounded off, and what is causing the difference is because of the rounding figures. But if not that, they are supposed to be equating. So by the time you leave the question, you leave the examination room, you know whether you've passed or you failed, because they think they balance. So we've drawn our account. We can try to enlarge this, and we try to merge it so that it becomes in the center. So now we are done with our account, that is process account one. We've done whatever is needed and it is balancing. So since we said here, this is process, sorry, this was supposed to be process two account. It means when you say process two, the corresponding entry must be put on the debit side of the process two account, because here it is on the credit side of process one account, which indicates that the output of process one becomes the input of the other process, since we are producing similar commodities. Then we can go to, we can put this aside and we take hope it is okay now. We can try to remove these ones, then we put for the process 2 so that we don't go to another sheet. Okay.